Coming up in this show, I'm going to bring you my opening comments on the markets, and you'll see special messages from the VIX. Harvey's going to bring you a trade idea using the askSlim tools, looking at analysis in SMH. You're going to want to see this because, of course, the semiconductors are important. Level 3 special, don't miss this, 10 reasons you'll want to join, and I'll bring you my analysis of the stock market, an important look at the tech leaders, and why there is danger coming in weeks ahead for the stock market.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim, and this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market struggled again last week, chopping in a narrow range. The stock market tried several times to put on a rally, and each time a piece of news came out and reminded investors they better do some selling. Monday we saw the market move up as strong Dow stocks pushed to the upside, but then Tuesday brought a reversal as weak export data in China weighed on the market, and then Moody's downgrade of the 10 major banks, that really weighed on the markets. So that was a reversal on Tuesday. Wednesday saw an early morning rally, but then a big move back to the downside as Supermicro reported weak revenue forecast, and the semis moved sharply to the downside. Natural gas spiked actually as much as 40% in Europe. That strike in Australia threatens the supplies, and that has everybody worried. And then on Thursday, the market moved 58 points to the upside and then reversed quickly to the downside. The CPI actually was in line, that came out, but they didn't like seeing that 4.7% core rate year over year, and that brought some fear into investors. They sold the market off again, and then the 30-year auction came out, and that was really weak, and sellers came back into the market as the 30-year bonds moved to the downside. So lots of things getting in the way of upside movement in the markets. Friday, there was more hawkish talk out of the Fed head daily, and the PPI came out in line. The bond market moved to the downside again and weighed on the markets. It's been choppy here on Friday as the investors have seen that they become very twitchy. As any news item that comes out, or they begin to sell, or any rally that comes, they look at as a selling opportunity. And the S&P 500 here on Friday, they were down as much as 27, rallied back to the plus side. And here on midday, they're moving down slightly to the downside. Even with the selling today, the breadth wasn't really bad and then went positive. So there are some buyers coming back into the market looking for opportunities. For the stock market, our analysis has shown the ideal peak in indexes was likely to come in the second to third week in August. That was in line with the expected low that we saw coming in IVs, implied volatility, and that's, of course, looking at the VIX. However, the stock market is weaker than we had anticipated, and this downside move is taking a little bit longer. And the VIX, or implied volatilities, look like they have already bottomed. Let's take a look at these charts here that I think are really important. The first one here, well, this is the VIX-Weekly, and you can see this doesn't have a lot of information on it. You can see that when VIX goes up a lot, well, that could be a sign that there's some panic on the upside, and when VIX goes down a lot, that's a sign that there's complacency. And of course, this is a good reason to be able to use these indicators that you see here, that there could be reversals on either side. Still, let's take a look at our analysis, looking at the weekly cycle analysis in VIX, or applied volatilities. And you can see in here there's actually an important rhythm that we're identifying here. And there was an important low right over here as it began to approach lower levels, getting down to about 17 here, and then moved up again sharply in this rising phase right there. And now you could see that there were lows pending right in this area. Now, this is the area of extreme fear where there's huge demand for puts. Remember, the VIX is a reflection of demand for puts. And when it gets up here, well, bullish stock market reversal is pending. And you can see, looking back over 3 years, back to 2020 over here, how valid this has been. And when it gets way down under here, under that 16 level, you get into the area where it is quite a lot of complacency going on, and the market is getting ready to move back to the downside. You can see we got way down over here to about 13, and this is extreme complacency, little demand for puts, and a bearish stock market reversal pending, and that's right here. We looked for this trough in implied volatilities to come here in the second to third week of August. However, it looks like it bottomed already, and that's giving us some warnings when we look at this, that we're about to enter a rising phase in implied volatilities. And you can see in here that they last for usually a couple of months. You can see that right here, a couple of months. This was almost 3 months. This in here was a couple of months, you can see. And this was very choppy in the upside, but actually lasted about 4 or 5 months. So this period of rising implied volatilities and problem for the stock market is just beginning. So that kind of changes it for us a little bit, because we were looking for the stock market to have some challenges moving forward. So that's a look at implied volatilities when you look at it with our analysis and without, and that has a strong message for us. This is a warning, really, that while a rebound is expected in the stock market in the next week or so, I think it's still coming, it may be more shallow and not getting up to the last peak as we had originally anticipated. We'll still be looking for that. We'll call it a bounce now and not really a test of the highs, because we think that's less likely, and looking for fast failures. We saw that last week as the market tried to move up several times but just can't hold. And now big techs look terrible. Apple, Microsoft, Nvidia. We're going to look at those, and I'll show you the negative signals that have occurred and the time frames for declines in those stocks coming up in our analysis on the stock market a little bit later in the show. And that August through October period of risk, it's probably already started. Okay, for the week, the stock market, we'll call it mixed, because the Dow did manage small gains and S&P 500 small losses. The NASDAQ and the Russell, the worst, down about 1.5%. Bond market, 30s moved down about 0.75 of a point. Weak, but not terrible, as the 10-year yields move up about 10 basis points, getting up to about 4.13%. And that is an area that we expect them to really have trouble, and we expect the bond market to begin to put some upside in here pretty soon as yields give back. And that could be the coming reversal of flow of funds as money moves out of stocks and into a safe haven into the bond market. Gold market, gold down about $27, and that's pressure from interest rates, the bond market moving down. And the silver market, its 4th week in a row, moves down pretty sharply, 85 cents. It's getting to an area that it needs to hold. Dollar gains about 0.6%, and it's up in a resistance area, getting up now to about 102.70. That resistance is 102.70 to 103.40, which we consider a sell zone for the dollar. And we think we're getting to a buy area for the euro. So that all is proper correlations. And the oil market gained 68%, 68 cents. That is the 7th week in a row on the upside. And you could see our analysis in all of these in Future Speak, which Ari presents every Wednesday. It's an amazing show for level 2, 3, and for members. Here's those VIX charts again, and you can see we're looking for implied volatilities to move to the upside and possibly sharply. Go to askSlim.com, explore, get acquainted. You can sign up for level 1 for $45 for 3 months. You're going to get information from us every day, especially on the stock indexes. On YouTube, subscribe to the channel, click the notification bell, and like the video by giving it a thumbs up. On X, follow us at askSlim. And questions you have on anything I present here or anything on our memberships or education and analysis, write to Matt. That's Matt at askSlim.com. Here's a trade idea from Arvi. He shares analysis on SMH, and this is really important analysis when you consider what my analysis is at the end of this show, where I show you some of these tech stocks and the alignments with those and the correction we think is coming in the market. This is really good stuff from Arvi, and he really shows you how to use our tools and our charting method. So Arvi, show them this great stuff.
Hello, this is Arvi Ramachandran. In this video, we're going to walk through a short-term short in the VanEck Semiconductor ETF, that is the SMH. Keep in mind, the SMH is in our focus list, which we monitor throughout the week, and we post our updated weekly and daily cycle analysis for you to our site, and this service is available for level 3 and for members at askSlim. What we're seeing here in the SMH is really quite interesting. We're seeing a very likely intermediate term high that is now forming here in the SMH. Let's first walk through what's going on the intermediate term. What we see here in the SMH is this rollover in our weekly reversal scout, which is this green and purple line. When it's purple, it's negative, and when it's green, it's positive. And we use this to help us with cycle facing. And right now, it is turning red right here on a closing basis. So that is raising the odds that we are getting into this intermediate term corrective period with our low due 925 to 1113. On the downside, we are looking for a move into this zone from 144.5 to right around 135 even. If we shift over to the daily chart, you'll see the trade idea. And keep in mind, the askSlim trade idea service is available for level 3 and for members. What we do is we walk through our weekly and daily cycle analysis for you, share the overall logic along with our levels on the upside and downside, and it's a great way to learn our overall methodology in real time. So what's happening here is we have had a breakdown in the SMH after a series, if I just modify this axis here, a series of higher cycle highs and higher cycle lows, just in a really strong uptrend, as we all know. That is now changing as we now have a cycle breakdown versus that key low right there at 152.29. We have our next short-term low that's due 817 to 828. So the highest odds here at this point would be only to see a lower high to form here versus that old high at 161.17, and then for this to roll down again as the shorter time frame money flows are now pushing on the downside. So that is what we are looking for here in the SMH, is for a small bear flag to form and then for this to turn down. The favorable zone for this idea is 153.59 to 156.48. If it closes through the 78.6 at 158.54, that would render this idea no longer valid, and we are looking for a move down to this 78.6 fib and this prior cycle low right there, and that is 146.87 to 142.98. One final thing I wanted to share with you is what you would see as a level 3 member. So I'm going to go ahead and bring over our site right here. And this is the trade idea post for the VanEck Semiconductor ETF. If you scroll down, you would see this weekly and daily cycle analysis chart here for the SMH, along with our key levels on the upside and downside that I highlighted, along with the cycle timing. If you scroll down, you'll see this is the trade idea page, and we're always very transparent with you in terms of our overall bias accuracy and our idea accuracy. When things are good, you'll see it. When things are not good, you'll see it. So we're always very open book here with you at askSlim. If you go ahead and click on this SMH trade idea, One of the final things I wanted to highlight here was this SMH expanded view of the trade idea. Why? Because you'll see that everything I just said in this video is highlighted for you in words right here. We have all of our entry zones, our target zones, along with the reevaluation level, and then a summary of what I just said here on the weekly and daily cycle analysis. It's a great way to actually go back and look and see what were you looking at for a given trade idea. We are strong believers in tracking your own personal trades. That's the only way to get better, is if you're properly tracking your trades, and we always practice what we preach here at askSlim, so we are doing that for you for every one of these trade ideas. As always, if you have any questions or comments, feel free to send me an email. Thanks again, and have a great day.
My analysis is coming up, but first, you got to see this special. You have to see this, our special trial offers for Level 3, education, analysis, and support for traders and investors, and 10 reasons to become a Level 3 member. Take a look at this, and then you'll see the special discounts that we have coming. First thing is in our special trial is a Slimulator ranking system. This is unbelievable. 84 of the best traded symbols with weekly and daily charts with our cycle analysis updated all of the time. You get our momentum conditions in 3 time frames and the sum of the evidence directional bias. All of that information right in here, and you can toggle on scroll and just see so much information about those symbols that you really want information on. Just fantastic. And our trade ideas. This is analysis to help with directional decisions and target zones and entry zones on trades that we put up regularly. There are teaching videos in every one of these on how our methodology is applied, and trade planning samples shared on every idea. You can roll over for the highlights of the trade idea status and click for notifications. This is incredible, all of our great trade ideas. You're also going to get our daily snapshot. This is a daily report on the stock indexes. There is so much in there, it's just too much to tell you. You get trend, momentum, technical evidence. You're going to get our evidence comparisons on the different indexes, our charts. Just so much in here that you will just not believe it every single day. Also going to get our SIR live stream. You can see here on the S&P 500 and NASDAQ, 15-minute charts. This runs live. You don't need any special platform for it. And you're going to get our acceleration zones and our reversal scout on there, which really gives you a good sense for when the market is turning or in a specific direction, and which of these indexes are the strongest or weakest. You're going to get our chart streams, live charts and analysis with our proprietary studies plus Q&A on Discord. That's on all of these symbols you can see on the S&P 500, NASDAQ, and the Russell, gold, silver, TLT, and XLE, all those important symbols running live. And no special platform needed for this. All of our proprietary indicators included. You're going to get our whole video library, 10 video categories, over 600 videos, all of these, including our fantastic Future Speak every Wednesday and our live events that we do every other week. Just fantastic information. And you'll learn from my 50 years of experience and this great team. You get our cycle load timing tracker. Katie does a spectacular job on this. You'll know when cycles are in periods of risk or bottom pending or bottom confirmed, all of this great information. You'll get our futures, equities, and ETF hubs, which just have unbelievable information. All you do is click on these right over here and we'll bring you up a ton of information on each of those important futures for you to see. Then the Slimulator momentum tracker for active investors and position traders, over 1,000 symbols, 22 watch lists. You'll be able to get the longer term perspective and be able to see our directional bias here based on our built-in algorithms. Unbelievable, this momentum tracker. You're going to love it if you're a little longer term holder. And you're going to get our Discord server. You can come on here, connect with the askSlim community of traders and askSlim analytical team. There is so much in here and so much information that you'll be able to get. Just incredible. And support from our community and from our analysts. Wow, where else are you going to get something like this? All of this available to you. All you do is go to the top of the website, as you can see, and click that sign up now button. It'll give you all the information you need, stuff that I just told you about, and unbelievable, 35% off. Just $232, that's $77.33 a month for the first 3-month trial, 35% off. You save $125, or you can even get 50% off. Just take a 1-month trial. You get a good sense of what we do. 50% off on that. That's only $59.50 for the first month versus the regular price of $119. Unbelievable, fantastic information that you are going to get. This is an unbelievable deal, and we want you to get such a great sense of the work that we do, and I think you will find it just absolutely informative, educational, great ideas, and you'll see some of the absolute best content you have ever seen on any website, any sites that say they can support you. Well, they're nothing like this. This is absolutely incredible at these special 35% or 50% off deals. Please go to the top of the askSlim website right now and sign up. If you have any questions, write to Matt at askSlim.com. All right, stock market, projections on the S&P 500 and more. First, see this important information. Do read this slide. It tells you about how we approach the markets and what that means for you as you use our information. Stock market, S&P 500. Compelling look at the tech leaders, and we'll look at the NDX and SPX weekly, and we do believe that there is trouble ahead. Now, we've talked about the coming peak in the stock market that we expected to see in the August timeframe, thinking it would be around the 2nd to 3rd week of August. This decline in the stock market is extending a little bit longer than we expected, and that is giving us some indication that a coming rebound, which we think is going to come in the next week or so, is going to be shallow and potentially fail pretty quickly. So while the market is likely to try the upside and get some bounces, there is trouble ahead, and we want to present that as we look forward. Let's start out by looking at the NASDAQ right over here, and you can see that that NASDAQ chart is pointing at what I'm pointing at right over here is the downturn in momentum right there. So this is cycle analysis. On the bottom are the cycle brackets, and the cycle brackets are showing you a minor cycle, and you can see how that resolves itself right in here. This is called the translations from the ideal cycle, timing translations, and right in here a super strong translation, and another rally is expected, but now we're getting into this corrective period right in here, and this is where the trough timing is between these two timing lines right there, and the expected decline is out here into late September to early October. Now, this is our reversal scalp. You can see that it turned up over here way back at the beginning of the year. This is the 2nd week in January, and this is kept positive this entire time, this entire year. Even in this time of minor correction right there where it fell for about a month, this never turned negative. But now you can see you get a downturn right over there, and that is really important. And this points to a declining market here through the end of September, beginning October. Now, there is likely to be some attempted bounces in here, but now we don't think they'll get back to this level anymore. That engulfing is very significant. That came up to and just above that 161.8% fib extension, important level where it failed from, and now is moving to the downside. Again, expected upside and then moving back to the downside. So this is a sign that there is trouble. It's because you've gotten all the way down to this 23% already and this 13-week moving average, it is much more likely that the downside will take you here down to levels of about 14,003 to about 13,008, and you can see this 34-week moving average coming up right over here, and by the time you get to October, it's going to be up near this level there. So 13.8 might be a reasonable target on the downside, about 1,100 more points in the S&P 500. Now let's compare this to the key stocks that we look at. Let's look at Apple first, and you can see that, of course, Apple, the heaviest weight, is important to understand looking at this. So you can see the same thing has happened, and that is that upward momentum right there that occurred at the beginning of the year, and the strong momentum based on our reversal scout. If you want the reversal scout, you need to become a level 4 member and apply this to the Thinkorswim platform. And here is that downturn there, and there is a daily cycle. That's on the daily chart that points early October as a trough. And again, we're looking on the downside. It's met the first area of support there, but it's very likely to get down to 171 to 165 as those support levels coming out here into late September, beginning of October. So Apple gives you a very good sense that it is correlating with the analysis that we see in the stock market, looking at the NASDAQ. Next one we will look at here is MSFT, that is Microsoft, and you're going to see something similar here, looking at these cycle patterns. And this one, well, it's not similar, it is worse, because you had a very strong condition that we showed as this moved up right over here. Here's where momentum turned positive. This was right again at the end of January of this year, and then it moved up, and this started to turn down a little bit earlier than the rest of the market. That was right here on that earnings report where it left this huge shooting star and began to move down. Now this looks like the low is formed right in here, and then you have this momentum downturn. So this minor cycle is in the middle of October. That would then point to a much lower low sometime out over there into the beginning of the year. So Microsoft is even a worse chart, and what it says to us is that there's likely to be some attempted upside moves in here. They will offer selling opportunities and very likely to be moving down again into October, into this minor low right over there. You can see the difference, this positive cycle right over here, and this right over here, this very early negative failure, very much looking for downside here in Microsoft after any upside attempts. Of course, really bad for the stock market. When we look at that, and the last one of the big leaders, one of them that has really driven the market up very much based on AI and the sale of those chips, which really hooked a lot of people, if you ask me. It gets up to 480, and now it's trading at 409, so it's given a lot back already. Look at the momentum downturn right over there. The same timing here, January, it remained bullish through this whole period, and now what we're looking for is a decline over here into October again. So all of this is in alignment with that period of risk that we're talking about as we look at these three major stocks that have been basically the ones that have really led the market to the upside. That's why we focused on this, and especially with RV looking at the SMH this week. If you haven't seen that, go back and watch that SMH analysis and the bearish trade setup that he is looking at, and that is very much in alignment with what we are looking at. So let's go back to that NASDAQ again for one moment, and you can see in here that downward turn, the cycle that points to this decline out into this area in late September or early October. The downside in here that we're looking for, and the look here at the SPX, which is the S&P 500, and that period of risk that we have been discussing. And let's just look here at these last periods of risk and how important they have been. And you can see right over here the period of risk way back in a year ago February, right in here, how it brought that big decline. This one over here called for September to October of last year and that big decline. This one over here called for January to April and that big decline, and just getting into that right now. Again, we had looked for the short-term patterns to bring it up to test these levels, but this engulfing pattern right over there and the extended weakness on the daily charts and our daily analysis that we look at is warning us that this is going to continue on the downside with only some minor attempts to the upside. I want you to note in here, the reversal scout has not turned to the downside yet. However, the shorter term momentum indicators have turned to the downside. And once this moves to the downside, this will be indicating that there is trouble. Remember, you can use our market condition monitor to get the information in all of the different trading styles that may be out there, and that really would help you. This points to trouble ahead for the stock market through late September, early October, only some feeble attempts to the upside, and then likely reversing, as we have seen, back to the downside. Period of risk, well, it's right now, and we'll only look for some minor attempts to the upside. Get ready to have your selling trigger on when you see some upside movements in the market. I think that is the highest probability. We can always be wrong, but I think our analysis gives you a continuous edge in the market, understanding the momentum conditions, directional conditions, and of course, using our cycle analysis and proprietary indicators. You can get so much of that by becoming a level 3 member. Don't miss this opportunity. Just go to the top of the askSlim website and click that sign up now. That'll give you a lot of information on that page. And if you didn't watch it, go to the beginning of our show, and I did an extensive look at what's included at the 10 different reasons, 10 different pieces of analysis and help for you that you can use by becoming a level 3 member. 35% off or 50% off if you take a 3-month trial or a 1-month trial. Just fantastic. Go for this right now. That's it for this show. Please do go to askSlim.com and explore, get acquainted, become a level 1 member if you just want to take a peek at our daily information we put out. On YouTube, subscribe to the channel, click the notification bell, and give it a thumbs up. Do like the video. It does help us. Watch member videos in the playlists, and follow us on X at askSlim. Any questions you have, write to Matt at askSlim.com. I want you to be so unbelievably careful. It is so crazy out there. And I'm always wishing you great trading.